Hey guys, welcome back to my channel. In this video, I'll be sharing with you my weekly US stock market analysis. So we'll be taking a look at the S&P 500, the Dow Jones and the Nasdaq. Alright, so we'll first start with the S&P 500. So as you can see over here, this is the price chart for the S&P 500. And last week, we had a valid follow-through day. And we also had the S&P 500 closing above the 200-day moving average. So over here, you can see that on Friday's trading session, prices managed to close above the 200-day moving average. So that's a positive sign for the markets. And it's not just positive signs in terms of price action for the S&P 500. As we'll see later on, the move up in price by the S&P 500 is supported by improving breadth and participation of stocks in the overall US markets. So if the S&P 500 can stay above the 200-day moving average, the next potential resistance for the S&P 500 is at this point over here. So around this $418 level. So that's for the S&P 500. Now let's take a look at the Dow Jones. The Dow Jones continued to stay above its 50-day moving average and the 200-day moving average. So the Dow Jones is the best performing index right now in the US stock market. The next one we'll take a look at is the Nasdaq. So similar to the S&P 500, the Nasdaq also had a valid follow-through day last week, and the Nasdaq managed to close above the 50-day moving average last week. So moving forward, if the Nasdaq continues to rise, there are two near-term resistance that I'm taking a look at. The first is this trend line over here. So for prices to stage a recovery, we want to see prices of the Nasdaq breaking above and staying above this trend line over here. Then the next resistance for the Nasdaq to clear is to clear above the 200-day moving average, which is the black line over here. So that's a round off of the action of the different US indexes. Now let's take a deeper look and look under the hood. So over here, we have the S&P 500. And for stocks above the 50-day moving average, at the start of this week, we have 383 stocks above the 50-day moving average, compared to last week, which was 329. So that's a positive increase. And for stocks above the 200-day moving average, at the start of this week, we have 315 compared to 271. So that's also a positive increase. And for 52-week new highs, at the start of this week, we have 12 compared to 18 last week. So that's a decline. And for 52-week new lows, at the start of this week, we have 2 compared to 5 last week. So that's a positive increase. So if we take a look at the number of stocks above their 50-day moving average and their 200-day moving average for the S&P 500, we see that for both numbers, there's a positive increase in the number of stocks participating in the recent rally that the S&P 500 is making. And this is positive news because this shows that there's an increasing participation of stocks in the rally. The last thing we're going to see in the rally for the S&P 500 is that prices are increasing, but the number of stocks above their 50-day moving average and their 200-day moving average decreasing. So this negative divergence indicates to us that lesser and lesser stocks are participating in this rally, which makes the rally unsustainable. So for a sustainable rally, we want to see the number of stocks above their 50-day moving average and the number of stocks above their 200-day moving average to be increasing. And that is what we are seeing with the S&P 500 right now. And if we take a look at the percentage of stocks above their 200-day moving average, last week it was 54%. At the start of this week it is 63%. So that's a positive increase. And the same goes for the 50-day moving average. Last week we had 66% and at the start of this week we have 77%. So that's also a positive increase. All this shows that there's an increasing breadth in the markets for the S&P 500. Now let's take a look at the Nasdaq. For the Nasdaq, for the number of stocks above their 50-day moving average, at the start of this week is 2,729 compared to 1,894 last week. So that's a positive increase. For stocks above their 200-day moving average, at the start of this week, we have 1,737 compared to 1,345. So that's also a positive increase. For the number of stocks making their 52-week new highs, at the start of this week, we have 85 compared to last week, we have 80. So that's also a positive increase. And lastly, for the 52-week new lows, at the start of this week, we have 9 compared to last week, we have 81. So that's also a positive decrease in the number of stocks making their 52-week new lows. So for the number of stocks above their 50-day moving average and the number of stocks above their 200-day moving average for the Nasdaq, for both we see a positive increase. So similar to the S&P 500, this shows that the recent rally that the Nasdaq has made is supported by increasing breadth in the market. And the next thing that we'll be taking a look at is are stocks that are being bought or on my buy alert following through. So over here, I put yes because a lot of the stocks that I bought last week and the stocks that are on my watch list managed to break out and hold their breakout. As for whether there are any distribution days in the indexes in the last week, we have no distribution days. So all this points to positive action in the recent rally made by the US stock market indexes. So to summarize over here, the S&P 500 is above both its 50-day moving average and 200-day moving average. For the Dow Jones, it's also the same thing. But for the Nasdaq, it's above the 50-day moving average, but it haven't cleared its 200-day moving average just yet. As for the Russell 2000, which tracks small cap stocks to mid cap stocks, the index is above both its 50-day moving average and 200-day moving average. So overall, there are quite a number of positive signs in the recent rally. And for me, this week when I'm doing the screening of the stocks, there were a lot more setups. So moving forward for this week, if the stocks on my watch list are breaking out, I'll be buying them and slowly increasing my exposure. But with that said, this is still early stages if this is really a start of a bull market. So still being in the early stages, I'm focused heavily on managing my risk and not increasing my exposure to the market so quickly. So that's my weekly stock market analysis video. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it really helps the channel grow and allow me to produce more content such as this. And if you want more weekly videos, make sure to subscribe to my channel because each week I release new videos about investing, trading, and the stock market. I'll see you in those other videos to your financial success.